Good morning and welcome everyone to the Moneycontrol live stream. You're watching The Opening Well. I'm your host Nickey Mirchandani. Markets look set for a positive start tracking positive global handover. SGX Nifty indicates a gap-up opening for broader index in India. Asian markets trade higher following overnight gains of the Wall Street, and US stocks too have ended higher on hopes of slow and steady rate hikes. In terms of FII's data, the number looks interesting there. FII's bought shares was around 12,770 crore and DII's too have bought in shares around 2,000 odd crore. Well, with this, let us get going and discuss some stocks and strategies today with Pritesh Mehta, the Senior Vice President Research at Yes Securities. Pritesh, good morning.
Good morning, Nickey.
All right, I'm just going to ask you what's going to be a tactical long call coming in on Nifty and the stop losses thereof as the Nifty continues to gyrate around that 200 DMA.
Now, I'm a firm believer of the phrase that law of averages tend to catch up. And for a while in 2021, 2022, we did well. Nifty outperformed all the asset classes. And now in last few months, the things are changing. We are not having the strength, the momentum to outperform the asset classes as well as the other global indices. So yes, we saw the sharp correction in last 2 weeks, but around 17,000, 7,200 zone, I think there are cluster of support that are coming into play. So from here on, from a tactical perspective, going long would be the right approach. We saw a huge round of buying coming in day before yesterday, and then yesterday there was no follow through movement. But again, I'm expecting the things to pick up slightly because first of all, the banks are holding up. They are not giving away. They are not trading below the budget is low. Nifty Midcap 100 Index, they are trading above the bottom of October 2022. So there are several things coinciding, which tells me that from here on, there could be some pullback move coming of Nifty. So I think a rally towards 70,700 next few days is possible.
All right, since you've spoken about Bank Nifty giving the required amount of support per se for the Nifty and tactical long being the strategy right now, what are the levels that we can look in for Bank Nifty at this point of time, along with the stop loss for that matter?
So, for Bank Nifty for a while, despite the recent corrective move, this index has been holding on the support of 40,000 level. That coincides with the low which was marked around budget day. We also several GAN number coming into play in the same zone. So we expect that to be holding on pretty well. So with the 40,000 support in place, we can expect this leadership index to move forward. And I'm expecting rally towards 42,100, 42,200 in next few days.
When you said next few days, it's probably in this week that you're expecting this?
There are few. We can keep a time horizon of at least 3 to 4 days to play this long, both on Nifty and Bank Nifty.
All right, 42,000 on the upside and 40,000 as a support level. Pritesh, but VIX and Nifty, typically they move in opposite direction. As and when the market falls, the VIX rises. It's like a very known established historical relation that we've established. But this time around, if you see, the VIX has been falling along with Nifty. Do you sense more complacency around the current levels? What do you make out of it?
See, all the historical correlations are now thrown out of the window. Things are not performing the way they used to perform. The correlations are breaking down now. So rather than fixating on one particular parameter, we need to look at this market from a holistic perspective. So yes, VIX is an important part, but we've already seen volatile moves in last few weeks. So from here on, keeping an eye on VIX, yes, the volatility could continue, but this won't be the only parameter we need to observe. Ideally, for me, I would like to follow the 3 risk-on parameters for our markets. That is the BSE IPO index, that is the mid-cap index, and ratio of small cap versus Nifty index. So as long as these 3 are holding about support and moving higher, I think there is a good amount of chances that we can see both Nifty and Bank Nifty trying to make a strong pullback move in next few days.
Right. Right, Pritesh. Okay, I'm just going to quickly address the top movers of the day because we have a slew of counters out there which are really important movers for the day. Of course, first in the list we'd be talking enough and more about a bunch of Adani Group names. M&M Financial Services, Natco Pharma is also expected to be in focus. But the development coming in for Adani Group of stocks, that is important. Now, promoters have raised in around 15,446 crore by stake sale in 4 group companies. They've sold shares in Adani Enterprises, Adani Ports, Adani Transmission, Adani Green. Well, the deal has happened through secondary markets and block deals. In Adani Enterprises, the promoters have sold in around close to 3.39% of stake for around 5,460 odd crore. In Adani Ports, promoters have sold in more than 4% stake for 5,282 crore. In Transmission, promoters have sold in around 1,008, stake around 1,898 crore, beg your pardon. And for Adani Green also, there has been an amount to an extent of around 2,800 crore. So overall, if you realize, this is a very important deal coming in for Adani Group of companies, and also the amount, the buyer, which is important, and the marquee name coming out there. Now, do remember the fact that Adani Group in the past 5 weeks has been in an overdrive to calm investors' concern about the corporate governance, the indebtedness. Overall, the group so far has junked around 2.5 billion share sale by the flagship. Adani Enterprises has scrapped new acquisitions. They have prepaid some debt. They have promised to prepay more. So definitely this fundraise coming in will give in some surprise and probably some support coming in to the free fall that we've seen for Adani Group of companies. Apart from that, I'm also going to be spending in some time on talking about Titagarh Wagons and BHEL. Now, there are two counters that you can keep an eye out on. Your Vande Bharat Trainset. That's again the theme that is catching up for this. Both of these counters have emerged as the second lowest bidder for Vande Bharat Trainset, and they have also quoted in the L1 bidder for around 120 crore. Natco Pharma is an important one. They're going to be considering a buyback proposal coming in on March 8th. But apart from that, we're going to be quickly waiting on the sidelines for the markets to open just to see if there is any change of sentiment per se coming in from the fundraise that we have otherwise seen, from Adani Enterprise, the whole promoter group family altogether. That remains to be seen. All right, Nifty 50, we're looking at a positive close coming in for the market, 17,437. That's probably the levels that we're looking at. Quickly, we're seeing some amount of some support coming in given the positive global handover. FII's, DII's data have been supporting. Positive inflow coming in from Adani also seems to be, weighing or rather reviving the sentiment. Sensex too, we're seeing some positive momentum out there. 0.5%, more than actually close to 0.75% of a gain on this one. But also let's address the broader index for you just to see if we're seeing same amount of positive momentum across the indexes. And yes, we're also looking at Bank Nifty. Now that one has contributed 0.75% out there. Like Pritesh was pointing out, support seems to be coming in from the Bank Nifty index very gradually out there, but the momentum is building in. Mid-cap index too seems to be participating to the positive bias coming in for the markets, and the small cap index too, we're seeing gains out there, more than 0.5% gains out there on small cap index. Well, in terms of the top gainers and the top losers that we have on our list, apart from the sectoral index that we'd be looking at, remains to be seen. But let's quickly also look at how Nifty IT, Nifty Auto, how these names are faring, and also the top gainers and losers on Nifty 50 index needs to be seen to decide the market momentum. How is it stacking up? And let's look at the gainers first. Adani Enterprises, like we suggested. Well, Adani Enterprises, Adani Ports, SBI for that matter, Tata Steel, UPL, L&T. These are some of the top gainers on the list. Well, no surprise out there. We already pointed out that it looks like a support positive development overnight for these counters clearly. And if you look at the top losers that we have on our list, DRL, Sun Pharma, ICICI Bank. Apart from that, we are looking significant, very, very minuscule gainers out there. Clearly, the market breadth right now seems to be positive. And if you talk about the overall contribution that we've seen, somewhat advances 45 versus declines 4. So we're clearly seeing that amount of the market breadth also holding up positively for these counters. But what I'd also like to mark is Interglobe Aviation and the stock momentum that we can see thereby, because Moneycontrol has reported on a story where it suggested that Indigo targets US market via a code share agreement with Turkish Airlines. Now they have jointly filed an application with US Department of Transportation, the nodal agency for such filing and approvals. So do quickly go on our websites and also read on this story. But Pritesh, I'm just going to quickly come back to you and ask you about Adani Group of stocks. Sure, there is some compliance issue out there, but your view on ACC and Ambuja, if at all.
Yes. Now see, we have created a customized cement index, and it is a mixture of the large cap and mid cap names. And this portfolio index is trying to break over the peak which was created in the month of April 2022. So yes, there is momentum in this space, and see, this market will try to move in a range. We saw 17,200 holding out. Now we'll try to inch higher to 7,700. But sectoral participation is important. So cement is going to play a big role from here on. The way the star charts are shaping up. So if you talk about Ambuja, yes, it is an underperformer. It has been moving down. Suppose has kicked in lower levels. I'm expecting a rally towards 410 in this counter. ACES similarly, we have seen a strong underperformance. The stock can have a potential to rally to 2,000 levels. So yes, apart from these two stocks, Dalmia Bharat in the cement space, we have a good basing structure in place. The stock is again moving higher. So these are stocks that we would like to play in the cement space.
All right, Pritesh, we'll leave it at that. Thank you so much for taking out the time and speaking to us this morning.
No.
All right, that part of the show where we address the fundamental side of the story, and this time around we have a very special guest with us, Nitin Bhasin, co-head of Institutional Equities for Ambit Capital, joining us. Nitin, good morning there. I'm going to start off by asking you your views on the FII's positioning right now. It's become extremely bearish at this point of time, with short positions in the range of around whenever a certain range, it signals a tactical bounce back. Do you think we are at that point where we are seeing this bounce back? Do you expect the momentum to sustain here on?
So whilst, for the last few months, we've been highlighting that, we foresee that the Indian markets are facing a few pressures around global liquidity receding from the central banks. Number two, rising interest rates, which is an opportunity cost for India. And thirdly, not much of an earning support in the near term. We expect negative earning surprises. But in this backdrop, what we're also noticing is that the markets, especially the FIs, have turned extremely bearish. We've seen that in the past, them selling Nifty contracts to the present range is more closer to about 100,000. We saw that similar thing happen in October 2022. And when it happened, the next short duration, which is about a month or two, we witnessed a bounce. So this is a possibility, because it has happened in the past many times, that we were in the oversold territory as depicted by these contracts, but perhaps leading to a contrary indicator that the markets could bounce back 5 to 10% in the next few months, 1 or 2 months. But overall, our outlook continues to remain that the next 6 to 9 months, we may have a weaker market in India.
Right, 6 to 9 months, weaker market coming in for India, but might see some bounce back coming in a month or so. But overall, what is your strategy right now when you look at a market like this? Probably volumes are very tepid. You've seen regular developments coming in from conglomerates like Adani, where, the entire systematic risk has been at play. With markets like this, what do you prefer? Something like a large cap over broader index? What's your strategy out there?
So for the last 1 year, and especially for the last 2 and 4 months, we've been highlighting to institutional investors across the world that we find the mid caps in India particularly very expensive right now. Even the small caps, though they had went through a correction last calendar year, Our point of view on the mid caps has been, we see relatively valuations to their own history, relative valuations to even large caps, very punchy. And it is in the context of the earning expectations that the whole cohort has. We find them underinvested for the estimates that most of the companies carry. So we have always been maintaining for the last few months that one should be looking at large caps more and not so much on the mid caps and the small caps. And that is why our model portfolio, which we call the good and clean portfolio, over there we've been maintaining a very low position on the mid caps, as low as about 10 to 15% for mid caps and small caps put together. So today also, despite the last month or two moderation in the prices of the mid caps, multiple of them, we continue to maintain our view that it's large caps over mid caps and small caps as a market cap cohort.
Sure, I'm sure let's also chat about the latest market issue. Of course, we're going to be talking more about the report March insights that we've scanned through in detail to get to know more nuggets of the information over the long-term story, but just a little more topical discussion out there in terms of the Adani Group stocks, because we've seen some marquee names coming in. GQG Partners, which is probably now entered into this one, US-based. Got some credibility to it. Of course, the fund manager is also quite a marquee name. What do you make out of this development? Do you think now with this, the group of stocks would be able to kind of go through with their expansion plans and, for that matter, the requirements in terms of the debt repayment? How do you look at the whole development per se?
We presently do not cover Adani or Adani companies right now, so may not have an exact view on their cash flows or their earnings or the business valuation. But at the outset, looking at what's happening and developing in the stock prices of the group over the last month or so, clearly market was, or the investors are not finding too much of a confidence in the companies, perhaps the performance or the concerns that a particular research report had raised. This marquee investor coming in overnight perhaps allayed some concerns to that, and perhaps also increases the float of the company, which perhaps leads to an MSCI relooking at them in terms of the inclusion or the weightages of the Adani Group. Beyond that, I may not be well qualified to reply that how does it change, though they are building in some really marquee assets in India. But given a number of companies listed, given number of group entities, perhaps related party entities, which I may not be aware of, I may not be able to give an exact view for investors how to think about, but yes, a sentimentally positive on the stock prices, given that a global investor has come in overnight.
All right. Clearly, a sentimental positive. Remains to be seen if fundamentals play out according to the book as we're anticipating. But, I'm just going to quickly also ask you about your turnaround plays in a tepid market like this. Any contrarian bets in portfolio?
Well, right now, the way we look at it is some of the companies which are contrarian bets, not contrarian, but perhaps not spoken about that much. One of the mid-cap companies that we've added in the portfolio this time around has been Great Eastern Shipping Company, an idea which we've been recommending to investors for the last year and a half or two. Not the usual consumption story, but we find them trading at very relatively inexpensive valuations to their NAVs of the assets that they have, which is the shipping vessels and the offshore vessels. It is a market which is not about that much of sector allocation, as we mentioned in the report. What we've noticed is companies like Tata Motors, or for that matter, companies like Dr. Reddy's, performing very much in contrast to the entire index performance of the respective sector. So rather than focusing on turnaround plays, what we are highlighting is stock selection becomes very, very important within the sector also. But in the report, what we've highlighted is one can easily build a few ideas by looking at which are the companies going through the last 2 or 3 quarters of earnings momentum, perhaps trading at valuations which are not too expensive. We've recommended a few names like Green Pan Industries or a few others, though we do not carry recommendations on most of them as buy, but those are the ideas worth looking into. Our institutional investors can look at those ideas.
All right, Nitin, I'm also going to chat about the lower weightage of banks in the portfolio. That has probably been reduced I would like to understand the rationale behind it, both in terms of the valuation as well as the returns perspective. What is the underlying fundamental behind it? Because we're seeing some amount of support still coming in from Bank Nifty overall, from a market's perspective, at least the short term. But what do you make out of it?
Banks has been one of our high recommendation in terms of key overweight for the last 1 year. It's only about 2 months back or so, we moderately reduced, and even earlier in this week when we came out with the report, we further reduced it marginally, but still we maintain a slight overweight in the banks for our portfolio, especially banks and not so much around the NBFCs or the other financial entities. It's largely the banks, and within the largely the banks, we've reduced marginally our Bank Nifty position in it. We like private banks, we like ICICI, we like Axis Bank and Federal Bank, and these are top 3 ideas from the banking sector. However, our banking analyst Pankaj, and we believe that as we go into the next fiscal year, FY24, we may not be able to see a similar kind of performance from the banking industry, especially in the first half, and very definitely in the second half in terms of the NIMs that the top 11, 12 banks posted. So perhaps it is a time coming in wherein one has to start looking at some slight moderation from the massive overweight that we were carrying in our portfolio last 1 year, which worked out well for the model portfolio. On the other hand, presently, because of the performance, it is the IT sector which is equal to slightly overweight for us in our portfolio. It's largely the performance, it is largely the outlook on NIMs, which is leading us to moderate our overstance view on the banks, but we still maintain marginally overweight 1 to 2 percentage points as compared to a Nifty 200.
Sure. Nitin, also let's chat about the entire cement space right now. What do you make out of it? At this point of time, do you think something like an ACC Ambuja still looks like an attractive bet given their pan-India presence? Or would you prefer something like a regional player? Probably something like a Shree Cement also for that matter. How does that look? Because we're seeing significant amount of delay coming in on expansion plans otherwise by Adani. Now we don't know where the fundraise will go, but given the fact that if the expansions by Adani, at least in cement space, is not as aggressive as anticipated, do you see a further upside to this space? And if yes, which are the bets that you like?
So presently, our analyst has a point of view that we find most of the stocks expensive when it comes to the near-term EV to EBITDA multiples. We have been of a point of view that given the Adani Group's entry and the large expansion plans, perhaps there is a looming large danger on the industry in terms of how could the pricing power play out, because given everybody is expanding, even companies like Shree Cement, which have gone through a leadership change right now, are looking to change their branding or market strategy, which means that there could be pricing pressure in the industry for heightened competition. At the same time, definitely the next 1 year or so looks very good for cement volume growth, given the kind of infrastructure push both the central government and the state governments would do for either the elections or for the programs that they want to close ahead of the elections. We wouldn't be surprised if we are closer to 8 to 10%, or perhaps in certain regions, even more than that. Hence, at this, given that sort of a volume guidance or volume growth outlook, it looks cement is a space to be in. But at the same time, one should notice in the last 1 or 2 years, it has gone through a massive cost increase when it comes to power and fuel cost right now. So the power and fuel cost may have come off for the entire sector, but still we don't see much of a pricing power coming into the sector for it to expand EBITDA margins. With that sort of an outlook, we are maintaining roughly sells on most of the names, though we prefer within them an Ultratech over the other companies, which is ACC Ambuja or a Shree Cement or a Ramco Cement, very well knowing that some of the regional companies like Ramco, which is going multi-region, may post even higher than the industry growth. So we would prefer relatively in the whole sector where we are carrying sales, Ultratech over the other names right now.
Right, Ultratech over other names, but let's also talk about auto space, because we've seen significant amount of drubbing in the last 4-5 years, and finally some turnaround coming in, at least in terms of the stock prices, and somewhat the performance for these companies. What do you make out of the space overall? Because a couple of foreign brokerages have gone ahead and changed their stance overall on the sector right now. Are you also positive on the space? And if yes, what are your top bets apart from Tata Motors?
Auto sector as an overall has gone through last 2 years of CY21 and CY22 a very good performance. And given that performance, perhaps a relative outperformance to the entire Nifty, which is one of the key variables that we track, we were of the point of view since the last 2 months that it's time perhaps to reduce weightages on the auto sector. And hence, it's one of the key underweight calls that we believe, given that two factors: one, a very good outperformance that they're carrying, punchy valuations, and add to that a building up of the urban consumption stress in perhaps good part of the country, and rural not reviving for the two-wheelers. That was the underlying thesis for remaining underweight on auto sector. But within the underweight, we were carrying TAMO. So TAMO, Tata Motors, continues to remain our key idea, followed by perhaps an Ashok Leyland, where we see that there is a recovery in the volumes as we come off into the recovery of the Indian economy, perhaps a lot of industrial activity. You are going to see volumes doing much better over there. So that would be the second idea amongst the OEMs in the auto. And the third one that we have been recommending, where we do not carry a rating but prefer it over the others, is a TVS Motors relatively to a Bajaj or a Hero. Add to that the fourth one being Royal Enfield. So the four ideas in the OEMs that we like are Tata Motors, followed by Ashok Leyland, and perhaps the other two, Royal Enfield, which is Eicher Motors and TVS. Whereas in the auto ancillary space, we find very expensive valuations across. And over there, we are buyers on presently A, Sundaram Fasteners or Bharat Forge. So those are the two companies. But overall, as a sector positioning in our portfolio, we are carrying an underweight in the auto sector.
Sure, Nitin. Also, you've made some changes coming in on the small cap portfolio overall. You've removed in VIP Industries, of course, and have added another small cap gem. Please take us through that and talk about why have you removed in VIP Industries in the first place.
So VIP has been an idea that our team has been recommending for the last few years, an idea that we continue to like, but at any point in time, we need to think about the next 3 months, 6 months, or 9 months of relative performance where we could perhaps be able to generate more returns. We find that relatively inexpensive valuations, we would have seen in our report, we highlight that we like inexpensive companies. Perhaps GE Shipping is an idea where we find it relatively better in terms of possibilities of performance over the next 3 months to 12 months. And that is the idea to replace. We believe that there is a recovery in travel. There is a recovery in people wanting to go out and go to offices and buy bags or travel across the world and buy bags. VIP and Safari both are very good companies and are very good proxies to play that investment expenditure. But at the same point in time, valuations have become punchy. We are a little worried about the urban consumption in India. Hence, changing our outlook from an urban consumption-led mid-cap, small-cap company to going to buy or recommending a GE Shipping in our portfolio. GE Shipping is a unique company. It's a play on the global shift in the fuel trade, which is happening post the war in Russia and Ukraine, where the demand for crude may not be rising, but the ton mile traveled for crude is changing, leading to an undersupply. And we're not seeing much of new supply of ships, leading to a perhaps a very good earning season for them in the last 6 months, a very good balance sheet presently, hence a company trading at no risks of any balance sheet stress in the downturn if it was to be there in about a year or so, and price to NAV trades more like 0.6 to 0.65 times right now, and hence a relatively inexpensive bet, and hence a recommendation into our portfolio.
All right, Nitin, we'll leave it at that. Thank you so much for taking out the time this morning and speaking to us.
Pleasure.
All right, with this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching, and please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. For the rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.